Now, Spacex IPO is touted to be the biggest in history, which is targeting a valuation of $1.8 trillion. But a top research firm says that the number is simply too high. Morningstar has initiated coverage of SpaceX with a fair value estimate of just $780 billion. That is less than half of what SpaceX is asking investors to pay. Morningstar has been blunt and says that the shares are likely overvalued at the proposed IPO price. It adds that any valuation which is above $1.5 trillion would make the stock overvalued under almost any near-term scenario, which is SpaceX. The question is, what is SpaceX pitching to investors? Well, the company reported revenues of $18.7 billion last year. Its Starlink satellite internet service is the main driver, but SpaceX posted a net loss of $4.28 billion in the March quarter of this year. Most of that essentially came from AI infra spending. At the $1.8 trillion valuation, SpaceX price-to-sales ratio exceeds 90 times, which is far above the industry norm of below 30 times. Elon Musk is not backing down. He's comparing SpaceX's future to Tesla's rise. Musk even wrote on social platform X that Tesla's IPO market cap was just 0.1% of its current value, which is now worth over $1.3 trillion. SpaceX is looking to raise $75 billion by selling shares at $135 each. Pricing is targeted for June 11th. The company is set to list on NASDAQ on June 12th. The question is no longer whether investors want SpaceX, but the question is what is that at and at what cost.